for growth stocks, we'll be looking into these three: Darling Ingredients, VC Properties, and also Mastech Incorporation. So for Darling Ingredients, they actually develops and also manufacture sustainable ingredients from edible byproducts and food waste. So it's kind of like a recycling. The customer that they help them to develop is in the pharmaceutical companies, food, pet food, fuel and fertilizer industries. And they are actually also the leading producer of renewable energy. And they have three business segments: feed ingredients, food ingredients, and also fuel ingredients. So this is what Darling Ingredients Company is all about. Next, we will look at some of the financial metrics. The revenue, the overall trend is a positive and consistent uptrend. Whereas for their earnings per share, it's also a similar trend, and the earnings per share is $4.01. So this means that for every one share that the investor purchased, the company is able to generate about $4 of earnings or profit. And we can see that it's consistently in an uptrend manner. And next, we will look at their cash flow situation, which is also a positive, consistent uptrend. And finally, we'll look at the debt to equity ratio. And from here, we see that the latest debt to equity ratio is about 0.48, which is barely below 0.5. So based on these four financial metrics, this is something that we are interested in, and we will need to investigate further to determine whether is this a good company to purchase. Because even though all these four metrics looks good, we are not sure that whether is the share price currently cheap or expensive. Next, we will look at VC Properties. So VC Properties is actually a US real estate investment trust that specializes in gaming, hospitality, entertainment, and also leisure. So they have two main business segments, which is in real estate property and also golf course businesses. So now we will look at the numbers. So for revenue, it's a consistent positive uptrend. And for EPS, we see that because they only have their financial numbers since 2016, but overall, we can see that it was a sharp uptrend. Operating cash flow, which is also another positive uptrend. And also their debt to equity ratio, even though for the past 4 years, it has been quite a bit high, more than 0.5, but the latest debt to equity ratio is below 0.5. And next, we'll look at Mastech Incorporation. Mastech is actually a US multinational infrastructure engineering and also construction company where they install wireless, wireline and satellite communications, oil and gas pipeline infrastructure, conventional and also renewable power generation. And they have 5 business segments. The first one is in communications. The second one is in oil and gas. The third one is in infrastructure. Fourth in power delivery, which is like electricity. And also finally, they are involved in clean energy such as wind power, solar power. So this is the background of Mastech Incorporation. Now for their financial numbers, the revenue is also in a positive, consistent uptrend. And for the EPS, we noticed that one of the year it's below 0, which is in negative. Upon investigation, we found out that that year they actually has lost from one of their discontinued operations, and also they have a troubled Canadian wind project which caused this loss. But then the subsequent years, they are able to generate a consistent positive uptrend if we see the overall trend. And the operating cash flow is also based on the overall trend is in a consistent positive uptrend. However, their debt to equity ratio is quite high, which is more than 0.5. So with that, investors will need to take note that what is the reason that causes the debt to equity ratio to be quite high for this company. But that is not something to be alarmed. It's just that more advanced investigation is required to determine if this company is a good company to invest in.